Is the stock we're looking at. The company has decided to go shopping, has acquired a UK-based company, Foolproof. Reema caught up with Harsh Goenka, the chairman of the RPG Enterprises Group, and Ajay Bhandari, the chief corporate development officer of Zensar Technology, and began by asking them why they selected Foolproof and how does it fit in the Zensar puzzle. Listen in.
We've been looking at acquisitions over the last year or so, primarily tuck-in acquisitions to enhance our capabilities and competencies. And digital is an area of focus for us. When we found this company, Foolproof, based out of UK and partly Singapore, it was a very good fit because it is a digital marketing experience company, right at the cutting edge of technology. Brings in wonderful insights as to what the consumer is looking for. They have a marquee list of clients. Some of them, which I can name, are TSB, which is the local bank in UK. They work for Domino's in terms of bringing in, what kind of toppings are most required by customers. They worked with EasyJet for improving the revenue per seat. They work with some of the large majors in oil and gas. So it's a company which has very, very good clients, and we feel there is a lot of synergy that can be driven between the two organizations, primarily in downstream revenues like e-commerce and digital marketing, etc.
Ajay, if you could just tell us some financial details about Foolproof, the revenues it enjoyed, the kind of margins, its historical growth rate, and how it will be EPS accretive for Zensar.
So Foolproof has done, if you look at the last year, they did roughly £8.5 million. This year they're trending towards £9 million. They've enjoyed a growth rate of 10% historically. They are a kind of mid-single-digit EBITDA company, but the real reason for doing this acquisition, apart from their enviable customer list and their great capability in experience design, is also the fact that it lends itself to very good downstream services, especially in the commerce, content management area. Zensar has great capability, and the margins out there are pretty decent as well. So we think the combined potential of both Zensar and Foolproof will ensure that the margins are pretty decent, and therefore it will be EPS accretive.
The other thing I'd like to add is that they have a very competent set of management team, and the two founders, Mr. Woods and Peter Ballard, they would continue within the organization, and that's what gives us a lot of confidence.
But what has been the historical growth rate? Because if a company of that size, you would expect very high growth rates. What has that been? If you could just help us with.
It's been growing at 10 to 15% a year, but with Zensar coming in, bringing in a lot of customers and a lot of synergies, we think it's going to increase the growth rate.
So you're starting with a £9 million contribution in one full year of operations with Zensar. From there on, how do you see the financials improving?
We are hoping that they clock a higher growth rate than they've done historically in the past, which has been 10%. But like I said, the real value is the business that Zensar can get both downstream and the ability to cross-sell their services into Zensar clients. So we are hoping that the growth rate is much better than the 10% they did earlier.
£8.5 million in terms of revenues. What were the valuations?
Not privy to disclose the valuation.
More acquisitions, since you still have a lot of cash balance?
Yes, of course. We've been constantly looking at acquisition targets, and I'm quite confident more is yet to come.
Okay, that's Zensar. Stock is up.